Hello to everybody. As we promised this morning, we're coming with a new kind of analysis update of our positions in our portfolio just after the publication of the United States Payrolls report. And we pay your attention to one of the very important component of this report, which is average hourly earnings. Average hourly earnings, despite of the fact that overall situation with unemployment in the United States is running very well, as you can see, non-farm employment change came in much better than expected, 313 comparing to expectations of 205, and also the last numbers was revised higher. That's all in all, here the situation is rather good. Anyway, the unemployment rate ticked a little bit higher to 4.1% from expected 4%, and which is very important from our point of view. That's average hourly earnings came in below expectation of 0.1%, and comparing to the last numbers of 0.3%. All in all, that means that inflation in the United States is not so strong as some of the dollar bulls thinks at the moment. And taking into account this kind of opinion, we changed a little bit our portfolio. We entered a long position in the euro-dollar 22.90 with a stop at 122.60. Besides of the fact that yesterday the ECB was much more dovish than the market expected. Also, we still keep our short position in dollar Canada. We close position in dollar yen, but still suggest to stand aside at the moment, and we'll resell the pair at 107.90 with a very close stop loss. Let's see how the situation in the yen crosses will develop entering new week, next one. And also we'd like to pay your attention on our analysis of commodity block of currencies, update of analysis. Here we have a small in the Aussie, small long in the Aussie at 78. We entered a small long in the Kiwi dollar at 72.65 with a very reasonable stop loss of 35 points. And also we added and we increased our short position in dollar Canada. We added at 128.60, making an average now of 129.10. Why we did this in the dollar Canada? First of all, we suggest that the data, unemployment data of Canadian domestic data came in not very bad. As you can see, the unemployment rate ticked 0.1% lower to 5.8%. Overall, we suggested that the local economy, Canadian economy, is still running rather good, and from that point of view, taking into account also that Mr. Paul is the head of the governor of the Bank of Canada during his last conference after the Bank of Canada's meeting told that more or less the economy of Canada is doing very well, and despite of the fact of a possible negative impact of the protectionist measures by the United States, we knew that yesterday the United States President excluded the Canada from the list of sanctioned countries that should be imposed by new tariffs on imported steel and aluminium. And we suggest that now the Canadian dollar has a potential to grow and to pay back some of the losses he made during previous trading sessions. From this point of view, we added to our short dollar position in the dollar Canada and suggest that entering the new week, the Canadian dollar has everything to improve its position, and we suggest that the dollar Canada could go lower with the fast reliable support around 27.60 and another one around 26.60 per 27. Wish you a pleasant and nice weekend, and we hope that you will again with us next Monday, 12th of March. See you later, and bye bye for now.